Hello everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 26th of October. I am still expecting downward movement to break out of this consolidation zone that oil's been in for several weeks now, as it's formed a slow, curved, rounded top. I'm expecting a pullback is going to end about 23.05 in some weeks, but it could be deeper than that, so if that expectation is wrong, it may not be low enough. When the pullback is complete, I'm expecting a V-bottom and an upward trend to then resume with an increase in strength, volume and momentum. I expect the low in April 2020 for oil is sustainable, and I don't expect we'll see prices below this point. This Elliott Wave count for oil sees oil in a third wave up at supercycle degree beginning back down here. This big movement here is an Elliott Wave corrective structure. This one is a double zigzag, and that's a fairly common structure, particularly for a second wave. The simplest Elliott Wave pattern is 5 steps forward. In a bearish direction, this is an example, 1, 2, 3, 4, 5. The rules are 3 has to move beyond the end of 1, 4 may not move into wave 1 price territory, 2 can't move beyond the start of 1, 3 may not be the shortest out of 1, 3 and 5. Those are the core Elliott Wave rules for that simplest Elliott Wave structure. Flip it around for a bullish move, and I expect the bigger picture for oil is a 1, 2, 3, and then we'll have 4 and 5. That simple 5-step pattern, the simplest Elliott Wave structure. And so 3 has to move beyond the end of 1, and it has to move far enough above 1 to allow room for 4 to unfold and not move back into 1 price territory. So I don't have a target for supercycle 3 here, but it is substantially above the high of supercycle 1, which is back at about 145. Let's take a look at how 3 is starting. Another core rule is the only allowable structure for this third wave is that simple 5-step pattern called an impulse. Let's see how this impulse may be beginning at the weekly chart level, where the low for supercycle 2 is this point down here. At cycle degree, supercycle 3 has to unfold as an impulse, and we'll label it with cycle 1, 2, 3, 4, 5, and it has to meet all those core Elliott Wave rules. And so the current pullback, which may be cycle 2, may not move beyond the start of cycle 1. When the pullback's complete, we'll expect a third wave to move beyond the end of 1, and it can't be the shortest of 1, 3 and 5. When it's complete, we'll expect a fourth wave to unfold and remain above first wave price territory, and finally a fifth wave to unfold. I've got 3 different ways of labelling this movement. All the subdivisions are seen in the same way. It's just the degree of labelling which I'm unsure about at this stage, so we have to consider multiple possibilities. Let's take a look at the first and what I consider is the most likely, with a start of cycle 1 back down here. There's this point down here. From this low to this high, this is a simple 5-wave impulse. At primary degree, it's labelled 1, 2, 3, 4, 5. This is the end of cycle 1, and now I expect this is the start of cycle 2, which is most likely subdividing as a zigzag A, B, C. I have a target for primary C calculated at 2 wave degrees at cycle and primary degree, giving us a small target zone to work with. The structure now for primary B is slightly relabelled with the slight high earlier this week. This is relabelled as a double zigzag, whereas previously I had expected a double combination. The second zigzag in the double has achieved a purpose of deepening the correction, although it's not by much, but it meets that general expectation. Here's the first zigzag in the double. It's labelled intermediate wave W. The double is joined by a 3 in the opposite direction, labelled intermediate wave X, and the second zigzag in the double, intermediate wave Y, may have ended this week. If primary B is not over, and if it continues further sideways, then it may not move beyond the start of A above 43.77 if I have my analysis of A as a 5-wave structure correct. Now that primary B may again be over, we would expect possibly the start of primary wave C down. We can also change the degree of labelling within cycle wave 2. We can move the degree of labelling down 1 degree. Primary A may be a more time-consuming, incomplete 5-wave structure. 1, 2, 3, 4, 5. When it's complete, a big bounce or big sideways consolidation for primary B, and then primary C down. This labelling would expect possibly a deeper target than the 0.618 Fibonacci ratio. That will be my first expectation, but I wouldn't be surprised if price keeps falling through that. For this count, only when I know where A and B have ended can I apply the Fibonacci ratios between A and C to calculate a target at primary degree. For now, I can just use the cycle degree Fibonacci retracement as an expectation, and cycle 2 may not move beyond the start of cycle 1. We can also move the degree of labelling here all down 1 degree, and it's possible that cycle 1 may not be over, only primary 1 within cycle 1 may be over. It makes no difference to the expected direction, the structure, the invalidation points or targets at this stage. It will make a difference though in coming months, so I'll keep running this wave count alongside the other because it may start to diverge in some months' time, but not for now. At the weekly chart level, oil still has resistance about 42 and support around about 35, just a little bit above there. Volume this week for an upward week, very slightly increased beyond the prior week, but really not by much. Volume remains very light as price is moving sideways. This looks like a nice V bottom here and a curved rounded top, slowly forming to continue slowly moving lower and only to increase momentum when it gets toward the next V bottom, I would expect. At the weekly chart level, ADX is declining with no clear trend. ATR is declining further as price moves sideways, so there's weakness in this rounded top, which is exactly what you'd expect. On balance, volume is constrained. If we see a breakout above resistance or below support, that may indicate the next direction for price. RSI is in neutral territory, plenty of room for price to rise or fall, and stochastics also perfectly neutral. At the daily chart level, we can see this consolidation a little bit more clearly. For the shorter term, there's resistance about 41.7 and support about 35. Price is swinging from support to resistance and support, while stochastics is also swinging from oversold to overbought. Here, stochastics has reached overbought. Price has reached resistance. I would expect now the end of an upward swing, and the start of a downward swing. I'll expect a downward swing to continue until price reaches support and stochastics reaches oversold. Do not expect when price is swinging from resistance to support within a consolidation for it to move in a straight line, because typically price behaviour when it's consolidating will be choppy and overlapping. ADX is declining at this time frame also. There is no clear trend. ATR again declining as price rises. On balance, volume is range bound. There was a little break above resistance, but it's come back in. We may need to draw another resistance line a little higher, but for now, this resistance line has better technical significance, so I'll leave it there. It's got greater significance because it has more tests. It's also really close to horizontal. Again, a breakout by on-balance volume above resistance or below support may precede a breakout by price. RSI perfectly in neutral territory, plenty of room for price to rise or fall. Stochastics now returning from overbought down into neutral territory, and MACD bullish. That's all from me this week with your gold analysis. I hope all of our members have a fantastic weekend.